Miss Aurorah is back. Secured entrepreneurs. Do you ever feel like you just need more time in the day? Like, this is one of those days. Now, I told you all that I was going to come back and do this video because you all are emailing. And I want to thank you for emailing. Please continue to do so at info@aurorahdayconsulting.com. We've gotten so many emails about this whole unincorporated association. Now, I don't know who's on the forefront doing these, whether they're seminars, workshop talks, or whatever, and they are telling some of you some things that are not true about the unincorporated association. By that, I mean, you're telling me some things that you're being told that you can do with the unincorporated association to avoid the cost of creating and having a trust. Okay, so you're asking Miss Aurorah, is this true? Can you actually do this? Is that what this entity is truly used for? You're getting conflicting information. And the reason why you feel like you're getting conflicting information is because when you've gone online, you've seen what the unincorporated association is, and then you are listening to these other people who are telling you that it's something totally different. They have created a unicorn. This is popular. Okay. For the last decade, Ms. Aurorah can tell you how many clients have come through here, Aurorah Dey Consulting, with documentation that made absolutely no legal sense whatsoever. And there was no thing that could have possibly have been done with those particular things that were created, because there was no, there weren't real legal entities that could be registered or done or anything to, it was insane. Okay. So in this video, Ms. Aurorah is going to explain this whole unincorporated association versus the trust that you're saying, should we do this or should we do that? What is the difference? Okay. I want to thank everyone who's already on the calendar. Oh my goodness. We are already lit for November. I want to thank you. I want to thank, and I see you. And I'm looking forward to, helping you with your business formations and just working with all of you. I want to thank all of the VIPs. Okay. We've had some VIPs in October and we've got a few already set for November. I'm always excited. We have such a lovely time. If you want to know how to do your VIP, just go to AurorahDayConsulting.com and click on the Work with Aurorah. That VIP page will be somewhere there, something like that. Okay, so you can see what we do over at the Four Seasons Hotel here in Las Vegas, Nevada, baby. Okay, so now we already know what we're doing. Let's get into it. For those of you who do not know who I am Miss Aurorah Dey, and this is the Secured Entrepreneur Movement. All right, so the first thing that Ms. Aurorah wants to tell all of the secured entrepreneurs who have emailed, who are thinking about this, who are thinking they're going to do this for these other purposes, what you need to understand is that the unincorporated association cannot hold assets. The unincorporated association cannot hold assets. Why? Because it is not a separate legal entity. It is not a disregarded entity. It is not an entity separate from the individuals who are inside of it. It is not an entity separate from the individuals who are claiming to be members of it. Okay. If something were to happen as you are operating this unincorporated association, you are 100% legally liable. You are legally responsible. If something happens in the course of you operating this unincorporated association, it is not the unincorporated association that can be sued. It is the individual or the individuals who are doing things on behalf of the unincorporated association that can be sued. This entity can be extremely damaging, okay? It does not have any of the same characteristics that of a trust, none whatsoever. The other question that you are asking about is the nonprofit portion of it and how that actually works. Okay, so if in fact you decide that you want to create an unincorporated association because you want to service the public. Okay, so that means that you would probably want to get the tax exemption from the Internal Revenue Service. You probably want to become a 501c3 for any type of public charity, school, like education, something like that, right? Now, here's the thing. If in fact you plan on raising $5,000 or less in a year, you don't even have to apply to the Internal Revenue Service for a 501c3 tax exemption. However, if you do plan to have more than $5,000 in that, in the unincorporated association's bank account, okay, you plan on creating more than $5,000 for the year, then yes, you want to fill out the IRS form 1023, okay, and you would have to include your bylaws, all right, with that, so that you can obtain your tax exempt status if in fact you're going the unincorporated association route. However, bear in mind, like I'm saying to you, there is no limited liability associated with it. So anything that's going on inside of this unincorporated association, the liable parties are the individuals who are actually doing the operation. It just so happens that a group of people decided to get together and form an organization. Okay, so maybe you did write up some little documents and like some of the stuff that you've sent over here. Okay, it's cute, it's real cute, but it's not doing anything for you. It's not protecting you. It's not assisting you in gaining and multiplying any type of real monies. It's just something that you're doing to avoid the cost and the expense of incorporating or actually forming a limited liability company that could actually benefit you in every way. Okay. So I want all of these secured entrepreneurs to understand that Ms. Aurorah is giving the Unincorporated Association a thumbs down. The other question that you had was, some of these things, this is how, people get tricked. You know how a little bit of the truth is sprinkled in with the lie, right? Okay. Somebody was giving Ms. Aurorah the scenario of, how there's unincorporated towns in states. Yes, that is correct. There's many. So they gave me the example of California, which is true. There's many towns in the state of California that you can look up and see they are unincorporated. But what does that mean? That means that they don't have their own, like they don't have a mayor, they don't have a governor, they don't have their own police department. They rely on the city that's closest that is incorporated to provide all of those things for them because they're unincorporated. They don't have a governing body. Okay. They're depending on the next town, the next city there that has all of that to provide those things for them. That's something totally different, but actually it makes so much sense because what am I saying to you? That when you are hooked up in this unincorporated association, you are a true individual. There's nothing about the association that's assisting you. There's nothing about the association that is giving you any type of protection. And again, because this is the thing that you all were saying in emails, you believe that you can go and title some property in the name of an unincorporated association. I don't know who is telling this. That is a lie. That is a lie. Because the unincorporated association has no separate legal standing in law. Just telling you. The other thing that some of you were saying in the emails is that you are being told that whoever is inside of the association can actually act as a trustee and hold assets. And also, okay, let me just clear that up right now. So for starters, in the unincorporated association, like I'm telling you, it cannot hold any assets, right? If you appoint someone, okay, in charge to hold some assets, then that individual would actually be playing a role as a trustee and would have to abide by the Trust Act of 1936. A secured entrepreneur, correct me if I'm wrong, but I believe it's the Trust Act of 1936, right? And that's because you're telling this person that you're entrusting them with something of value, right? So you still need some form of a contractual agreement. Why would you hand over something valuable to somebody that has no obligation or fiduciary duty to care for it or to even do whatever it is that you need them to do with it? I mean, I just want the secure entrepreneurs to be real clear about some of these things that's going on the internet. And just remember that, it's very hard to piece things together. If you're not really doing your own studying from actual, law books and things like that, if you're not really reading the law, and you're going to these people, and I don't know who these people are because I don't watch all these people on YouTube. You are always emailing Miss Aurorah. Did you see this? Did you see that? And some of the things I haven't seen, but for the most part, no, I don't watch all these other people because Miss Aurorah is fully occupied. I'm so grateful. Okay, so a lot of this stuff, we're in here laughing because I'm like, I've never even heard of this stuff, right? Okay, so that's the deal with that. If in fact you do decide to entrust something of value, I'm talking about it has to do with the association with another person. Yes, they are obligated to act as a trustee with your contractual consent, not the actual association, because it's not a separate legal entity. Okay, so now let me answer the questions as it relates to how you were trying to compare it with a trust. All right, let me answer these questions about the trust as it relates to how you were trying to put it together with this unincorporated association. There's no relation. All of the secured entrepreneurs know that the trust is a fiduciary relationship, okay? Whereas one individual, who we know to be the grantor, is entrusting another individual, which we know to be the trustee, to hold property, assets, intangible, tangible, okay, for the benefit of others, which we know to be beneficiaries, okay? Now, what I was explaining to some of you is that I don't want you to get this confused, where inside of the trust, somebody sent over some documents. Whoever did the documents, this person was named the grantor, the trustee, and the beneficiary. So we had to let the person know, first of all, you need so much education. Please take the Trust Basics course. Please take the Trust Basics course because this is outrageous now, okay? And then he said, well, what if I'm just the trustee and the beneficiary? And so I said, please take the Trust Basics course. Please take the Trust Basics course, right? And he says, well, what if I'm the grantor and the trustee? I say, okay, now if you are the grantor and the trustee, that is called a revocable trust. That means that there are no tax advantages. And at all times, remember that we need our trust because we are tax planning. We are utilizing tax strategies. Okay. And I would never want to have any type of CPA or anybody on my financial team who doesn't know that at all times, this is planning. We are dictating how this thing is going to turn out based upon the protocol that the Internal Revenue Service has laid out for us. Okay, as we know, there are many, many ways to legally avoid taxation based on tax law. Okay, point blank. And you must at all times create your tax strategy and your tax plan. So all these people who like to brag about, we paid this amount of money in taxes. I had a tax bill, but I don't even want to know you. I don't even want to know you because there's some stuff. And it's like, wow, you mean to tell me that you didn't know how to remedy that? You didn't know that the IRS says this about that? Like, who are you dealing with? Okay. So yes, there's some instances, if you're not a large enough company and you don't have that many deductions and things like that, yeah, you got a filing, buddy. Okay. But some of this stuff is like, I don't know where your education has been. I don't understand that, right? So these things that you are emailing Miss Aurorah is like, I don't know who's on the forefront that definitely does not qualify, that definitely does not have a business, cannot guide anyone in the correct manner, okay? So understand this, that, Miss Aurorah always tries to tell you that you also have to deal with the right legal people. Okay, you also have to deal with the right people who, number one, they have integrity and they have a lot of knowledge and they employ this themselves. And one of the rules that Mr. Aurorah goes by is I from life experience, I don't want to deal with anybody or entrust, my finances, any of these account, none of this stuff to anybody who makes less money. If you're not really doing it like this, it's not going to work. It's not going to work, right? They tell me that Oprah has her own team, her own. She's not using any of these financial institutions. She does her own thing. I'm like, it makes so much sense. Okay. Anyway, I want the secured entrepreneurs to be aware that, okay, so the grantor and the trustee, that is the revocable trust. That comes with absolutely no tax advantages, right? It is the irrevocable trust when you have the grantor, the trustee, and the beneficiaries, all right? That comes with all of the tax advantages. Now, when in fact the trustee is in control of all of these assets that belong to the trust, they do not belong to the trustee. Nothing is in the trustee's name, okay? Everything belongs to the trust, okay? This is how you're really, there's nothing that, you have no ownership over anything. There's nothing that is going to affect you. Your creditors have nothing to do with any of those assets in that trust if you are the beneficiary, okay? Because that's something totally separate. Those things do not belong to you. You just get to benefit from these things, okay? So I don't want you all to get it twisted. So again, I'm going to tell all of the secured entrepreneurs, like I told this gentleman who emailed up here with all this confusing stuff. Please check out the Trust Basics course. I'm going to leave a link down below in the description. It is the introduction to irrevocable trust. It is the introduction to religious trust, and it is the introduction to wealth cycles, where Miss Aurorah shows you how to create a structure that is all about tax planning, number one. But it's about how you're going to build your wealth cycle, how when money comes in, where it goes, how it goes there, why it goes there, what it is that you have to gain, the whole 9 yards. It's a complete, introductory education for those who need to learn about trust and why, as an entrepreneur and business owner, you must incorporate trust into your plan. Okay. Now, I think that's all Miss Aurorah wants to say in this video. I'm going to answer some other questions about some of my e-commerce preneurs that we have on board. I'm so excited to work with all of you. And you all know you can find me at AurorahDeyConsulting.com. And until next time, ta-ta.